Hey puppy trades, I wanted to do a video analysis update on the general stock market. We're going to talk about the S&P 500, XLY consumer disco, and XLV in the short term. We're also going to talk about gold and silver. These spot metals, I think, are getting very close to this major pivot point that long-term investors have been patiently waiting for. So we'll talk about SLV and GLD. We'll also talk about gold, GOLD, and platinum for the precious metals front. Finally, we'll talk about Huya and OKTA as my favorite swing trade setups. But first, I want to talk about something I've been hearing recently. You know, the general sentiment on FinTwit right now, no one can predict the stock market, right? You can't predict the stock market. You just set your limit orders, you set your stop orders, and, you let price discovery do the work. And that's a really dangerous way to think about investing. That's a really dangerous way to think about investing. And here's why. If you live in Florida, and it's the middle of August, and the weatherman tells you, hey, there's going to be a Category 5 hurricane coming through your city next week, and you say to the weatherman, oh, you can't predict the weather. No one can predict the weather. You remember that one time in April where you said it was going to be sunny, and then it rained, and my son's baseball game got canceled? No one can predict the weather. The next week, you're going to be standing on the roof of your house. You're going to be trying to wave down a helicopter, right? So it's really dangerous in investing to say no one can predict the stock market, right? Because then what happens, the weatherman is saying, hey, this inflation hedge called Bitcoin, this asset class called cryptocurrency is about to explode. It's about to explode. It's about to double. RIP to the US dollar. And the weatherman's going to be saying that, and you don't act. You don't act when the weatherman is screaming, hey, this Bitcoin thing, it's about to blow up. Okay? And right now, if you thought not buying Bitcoin below 10,000 was bad, I'm going to tell you right now, SLV below 25, spot silver below 25, that's going to be what Bitcoin below 10,000 sounded like in the not too distant future. Okay? And the weatherman right now can tell you that silver is going to double in value. The longer term cycles, next 1 or 2 years, silver, SLV will double in value. The longer term cycles, next 1 or 2 years, platinum, another precious metal, is going to double in value. And on the longer term cycles, this oil and gas giant, Chevron, put in a generational wave too low. And in the next 3, 4, 5 years, this oil giant is heading to the 300, 400 range. This is a wave 1 and a wave 2 low. This is a wave 3 and a wave 4, and this is a wave 5, putting in a large degree wave 1. Then we go on an A, B, C correction, we put in a large degree wave 2. Chevron just entered a massive bull market that is going to last many years. American Airlines, this is a massive, massive buying opportunity that happened. You got an American Airlines, you're probably one of the best investors ever. If you got an American Airlines below 13, 14 for the long-term hold, you are one of the best investors on the face of the earth right now, because this is going to explode. This is going to explode. Okay? So on the long-term cycles, we'll talk about SPY and XLY and XLV, in the short term. But on the long-term cycles, if you just look at American Airlines and you look at Chevron, the stock market is going to do extremely well, in the coming years. And we know that's going to happen because we analyze the stock market as a whole. But it's not all rosy, because if Chevron is exploding to 250, 300, 400 for this wave 3 from this wave 2 low, then you have to ask, what's that going to mean for the price of oil? And I'll tell you right now, you're going to see $8 a gallon gas. And so if you tell the weatherman, hey, you can't predict when a hurricane's going to come, honestly, it's going to be worse for you than someone in Florida on top of their house waving down helicopters. You're going to be trying to drive to work paying $8 a gallon for gas. You're going to be trying to feed your family, and the price of meat is going to double. So we know, based on Chevron, that this stock market is going to be generally bullish for the next several years. We know, based on American Airlines, that the stock market is going to be generally bullish for the next several years. Okay? But it's not all rosy, because if we look at silver, the price of silver is about to double. The price of silver is about to double. The price of platinum is about to double. Okay? These are rocks. So if the price of rocks are about to double, that means the value of your dollar is going down. So the way I see it, we're in clearly hyperinflation. Okay? We're printing stimulus checks every couple of months. The required reserves ratio is 0%. And the weather people are telling you Bitcoin's going to double, right? Bitcoin's going to explode and silver is going to double. Silver is going to explode and platinum's going to double. Platinum's going to explode. So if you think people can't predict the stock market, then you probably think people can't predict the weather. And when a hurricane comes, yikes. Call FEMA. Okay? This is the S&P 500. I've called this very well. This is a wave 1 and a wave 2 low. This is a wave 3 and a wave 4 low. I believe right now we are within a wave 5 from the September low. As I just talked about with American Airlines and Chevron, on the long-term cycles, the stock market is extremely bullish. So if the time horizon's longer than 4 to 6 months, the rest of this video besides gold and silver probably doesn't even matter to you. But SPY, right now, this is the wave 1, this is the wave 2. This is the wave 3, this is the wave 4. Now we are within wave 5 from the September low. We're going to have a lot of confirmation from XLV and XLY that we're within wave 5 from this low. Okay? But SPY is within a wave 5 from the September low. Wave 1, wave 2, wave 3, wave 4. Now we completed wave 1 of wave 5 around 394. I came out and I said, hey, we reached 392. If we get a dip to the low 380s, that's going to complete wave 2 from the 129 low. Then we rocket higher for waves 3, 4, and 5. Voila, mid-February, I said that. Then we had an ABC correction, a little lower than I thought. Low 370s, not low 380s, but I had cash to buy the dips. I told you guys exactly what dips I bought, specifically in the electric vehicles, First Solar, and Huya. We'll go over Huya as well. And that's our wave 2 low. So right now, I believe this 371 low is the wave 2 low. So in Elliott wave theory, what you do is you take the 161.8% extension of wave 1, and that takes you to the wave 3 target of 410. Now, in orange right here, I have another really important level for SPY, and that's 406.89. That is the 123.6% inverse retracement of this major correction. That's a very important spot for algorithms. So I think 406 and 410 is forming a really important zone that's going to be our next level of interest for the S&P 500. Assuming the weatherman predicts this perfectly, the textbook scenario is that wave 3 goes to 410. The wave 4 correction is the 38.2% retracement of wave 3, which would take the S&P 500 to 395. And then we go the length of wave 1, place at the wave 4 low, and that takes SPY to where I said would be a very, very close top a long time ago. 420, 421. I'm not someone who likes to call tops against the trend, but 420, I'd be extremely cautious unless this correction is deeper than I think it's going to be. But bottom line, SPY is in the clear until 406, 410. No matter what you're counting, that's going to be a major inflection point. Then we'd have a wave 4 correction. At the very minimum, that's going to be to 38.2%. Sometimes wave 4 can be shorter, but the textbook wave 4 is the 38.2% retracement of wave 3. And then the textbook wave 5 at minimum is the length of wave 1 placed at the wave 4 low. So bottom line for S&P 500 in the short term, 406 to 410 is next. Now, there's 2 ETFs in the short term that I'm going to tell you right now will do a much better job of letting us know where the stock market is going. Okay, so I always say, if you want to know where SPY is going, you don't look at SPY, you look at components and sectors within SPY. And the 2 components and sectors within SPY that are going to do the best job of letting us know where the stock market are going are XLV, healthcare, and XLY, consumer discretionary stocks. Okay? So this is a perfect wave count for XLV in the short term. this is a wave 1. We have an ABC correction wave 2. Now, the next time that someone says who's buying up here or who would buy the stock market based on this news, I want you to ask them this question. Who decided that they were going to sell XLV, the healthcare ETF, at exactly the 161.8% extension of this wave 1? Because that is the exact textbook wave 3 target. So in Elliott wave theory, when you have a wave 1, you take the 161.8% extension of wave 1 to find your wave 3 target. We see that that is exactly where the computer algorithms, the high-frequency trading algorithms that run the market, decided to sell. So they sell at exactly 318 to complete our textbook wave 3. Now this is even more textbook. A textbook wave 4 in Elliott wave theory will retest the high of wave 1 without reaching it. And that is exactly what this XLV did. It went A, B, C. It retested the high of wave 1 and it did not breach it. So right now we have a textbook wave count for XLV. If we take the length of wave 1, which is the 2.5 month move, and we place it at the wave 4 low, then we know that XLV is going to go to 124. The time target is that that's going to happen in the next 2.5 months conservatively. Generally, wave 5 is more powerful than wave 1, so I actually think it's going to happen quicker than that. But in the next 2.5 months conservatively, we'll see XLV reach 124. That's found by taking the length of wave 1 and placing it at the wave 4 low. So right now, I think the best levels to look for the entire stock market are going to come from XLV. We want 109 to hold as the low, and then we're expecting to, we're completing some sort of wave 1 from this wave 4 low. I am personally looking to buy a wave 2 if we get it. I'm not gaming this. I'm not selling anything for this. If we get it, I'm looking to buy a wave 2 low below 112 to ride XLV higher to 124 in the next 2.5 months. Okay? So this is really pretty right here. And we don't need to know where SPY is going if we know where XLV and XLY are going. In my opinion, we do. This is wave 1, ABC correction wave 2, wave 3, ABC correction wave 4, and now we are within wave 5. If we take the length of wave 1, place it at the wave 4 low, as long as 109 holds, XLV is going to 124. Conservatively, that will happen in the next 2 months. Okay, let's look at XLY right now. I like this wave count a lot too. Very clean. We have a wave 1 and a wave 2. Wave 3 goes past the 161.8% extension of wave 1. So that's definitely a wave 3. We have an A, B, C correction to put in a wave 4 low. So right now, this is actually some really good news that we got from XLV. The wave 1 has continued to extend higher from this wave 4 low. That's a really good thing. Because if this is a wave 1 and it's still extending higher, then that means the wave 3 target is going to be higher and higher the more wave 1 extends. Here's why. The 161.8% extension of wave 1 is the wave 3 target in Elliott wave theory. So if we get a dip, and this is a very short-term time frame, okay, I know you guys like doing short-term stuff. Don't forget the bigger picture. Okay, don't forget the bigger picture that this is a massive bull market, on any time frame longer than 6 months, right? If we get a dip in XLY below 162, I'm looking to buy it, and I'm looking to ride it at minimum to 183. That would be found by taking the 161.8% extension of wave 1, which takes you to 183. You would also take the length of wave 1 and place it at the wave 2 low, which also takes you to around 180. Okay? So if we see red in the market, which I'm not projecting, we're just preparing for. If we see red in the market, I don't think we go lower than 162 for XLY. I don't think we go lower than 112 for XLV. Okay, and I think at minimum XLV is going to 124 and XLY is going to 183. If we get this dip, I'll definitely update the whole plan. Okay, but the bottom line is we kind of know XLY is going to 183, and we know that XLV is going to 124, so we don't really need to know too much else to know where the stock market is going. So let's look at SLV and GLD. So when people say you can't predict the stock market, you know, I don't think that person bought Bitcoin, below 10K, right? They probably didn't buy Bitcoin below 10K. Someone knew Bitcoin was going to explode. 23,000, July 16th. 22,439, August 11th. October 8th, 22,000. Okay? Someone knew Bitcoin was going to double. Okay, and we look at SLV right now. SLV is about to double. The price of silver is about to double. And if you don't prepare, then when the price of oil explodes, you're going to be screwed. And when the price of meat doubles, you're going to be screwed. Okay? So the next time someone says you can't predict the stock market, just picture someone in Florida on the roof of their house trying to wave down a helicopter because the weatherman told them there was going to be a hurricane, and they said you can't predict a hurricane. Okay? This is SLV. No matter how you count this in Elliott wave theory, if this is a wave A and this is a wave B, the minimum wave C target is the length of wave A placed at the wave B low. If this is a wave 1 and this is a wave 2, the minimum wave 3 target is the length of wave 1 placed at the wave 2 low. That's why I use equal legs so much, because whether it's an A or a B, or whether it's a 1 or a 2, the wave 3/wave C target is the length of wave 1 or wave A. Now, I actually do believe this is a wave 1 and this is a wave 2. But even if you disagreed with me, this is clearly going to 50. And we have a beautiful pitchfork. If we take this low connected with this high and this low, gorgeous reactions on the median, SLV in the longer term cycles is going to 50. Now, I've said repeatedly, precious metals, if you're going to play precious metals, it's a long-term investment. Okay? I've said that repeatedly, but right now I'll say, I think aggressively this happens in the next, by the end of this year. Aggressively, this could happen where SLV doubles by the end of this year. My just right time target would be that this happens around the middle of next year. My conservative time target for all these precious metal projections is that this will happen by the end of 2022. Okay, so aggressively the end of 2021. If you think that's crazy, maybe Reddit will get a hold of this. I'm just kidding. But aggressively by the end of 2021, conservatively by the end of 2022, I expect all of this to play out. But I think there's a lot of merit into holding the precious metals and the precious metal miners as long-term holds. We'll get into some of those right now. Obviously, that's not investment advice. That's just my personal opinion, okay? But precious metals, they're kind of like Bitcoin, right? They're direct assets that will protect you from inflation. And once they take off, they've taken off, right? I get so many questions about Bitcoin right now when it's at 50K. When do I buy Bitcoin? You don't. Maybe you buy Bitcoin miners, but the time to buy Bitcoin was below 10K. Okay? And right now, I'm saying SLV is the new Bitcoin below 10K. Silver below 25, that's going to sound crazy to a lot of people in a year or two. Okay? This is wave 1, this is wave 2. SLV is going to 50. Let's look at the short-term projection of SLV right now. I think that this is an interesting opportunity for SLV. So what this looks like is that this whole move last year from 318 to 810, so basically 5 months, was a wave 1 or a wave A. That means that this is an ABC correction to put in a wave 2 or a wave B. Now we have broken above this wave 1 high. That means SLV silver is incomplete. So before I label these, let me make sure I'm drawing this right. What could happen, I'm not calling the bottom. I don't get paid to call bottoms and tops. I focus on the 80% of the move. I don't focus on the bottom 10% or the top 10%. I try to focus on the 80% in the middle. But this right now appears to be some sort of ABC correction from this high. What it could be is that this is a truncated wave C. Truncated is a new vocab word. All it means is that wave C did not go to the equal legs target of wave A. That definitely happens, plenty of times. You don't really want to be constantly betting that that's the case. But this could be a truncated wave C. The point is, even if we get another thrust lower to this equal legs target, it's only taking SLV to 22. That's not that much lower than where we are now. The bigger picture is that this is either a wave 1 or a wave A, and this is either a wave 2 or a wave B. We clearly complete an ABC correction from this low on SLV. So what I'm expecting is that SLV is now incomplete to the upside on these short and long-term time horizons. So the true invalidation level is down here at 20.45. That's the true invalidation level for this particular projection, kind of on the medium-term time frame for SLV, is below 20.45. I'm looking for this 5-month move to be replicated. So in the next 5 months, if 20.45 holds as the low, I believe this was a wave 1, this was a wave 2, and if you said this was a wave A and this was a wave B, it's the same thing. We've broken above the wave A high. We're incomplete to the upside. If you said it was a wave A, the wave C target is the length of wave A placed at the wave B low. Regardless, it's the same outcome. SLV is going to 36. I think SLV is going to 36 in the next 5 months because that is the length of wave A placed at the wave B low. So if SLV is above 20.45, I expect in the next 5 months it will reach 36. How's that happen? Well, we've broken above this wave 1 high. So now we are within a wave 3 of 3. So this tiny little move lower to 22.43 is still on the books, but SLV could also just run off, right? And then, you kind of missed Bitcoin below 10K because you were looking for $2 lower. This is 20.45. This is the invalidation level. The next target is the equal legs target of this move, this whole move, placed at this wave 2 low. SLV is going to 36 in the next 5 months. It's going to 50 in the next year, year and a half. We're talking about a rock doubling. Now, I know a lot of you guys will say, oh, silvers and electric vehicles, silvers and solar panels, that's why it's going up. No, it's going up because of inflation. Okay, it's going up because of inflation. Let's talk about gold right now. This is GLD, long-term time frame for gold, right? So when people say you can't predict the stock market, I'll show them this gold chart and say, look, we know that gold's going to 244. I expect GLD is going to 244 in the next year. Okay, here's why. This whole move is either a wave 1 or a wave A, no matter how you count it. I think it's a wave 1. This right here is a wave 2 or a wave B. The reason I'm putting these slashes is because even if you disagree with me, the length of wave A is the wave C minimum target, and the length of wave 1 is the wave 3 minimum target. So what we're saying right now is that GLD is incomplete to the upside. So if we take the length of wave A and we place it at the wave B low, or we take the length of wave 1 and we place it at the wave 2 low, the minimum target for GLD is 244, 245. Okay? I think that's very interesting because in Elliott wave theory, it appears that we're counting like this from the wave 2 low, and it's going to look something like this, where that was a wave 1 and that was a wave 2. That means this run right here in blue was a wave 3. Now it's really interesting because wave 3, in Elliott wave theory, there's a couple of principles. One of the most important ones, 2 of the 3 impulse waves, the impulse waves are wave 1, 3, and 5. 2 of the 3 impulse waves will be the exact same length, and wave 5 has to go above the high of wave 3. Okay? So if we say that the wave 5 minimum target is the length of wave 1 placed at the wave 4 low, well, that's a problem because gold isn't going to break above this high, which would be incorrect. What is going to happen is that wave 5 isn't going to be the length of wave 1 in orange, it's going to be the length of wave 3 in blue. And isn't it quite interesting if we take the length of wave 3 and we place it at this wave 4 low, then GLD, gold, is going to go to, sorry, that's the pitchfork. If we take the length of wave 3, we place it at the wave 4 low, GLD, gold, is going to 245. So isn't that interesting? The length of wave 3 placed at the wave 4 low takes GLD to 245, and the length of wave 1 / wave A placed at the wave 2 / B low takes GLD to 245. So I really believe GLD is going to 245 in the next year. A very tight stop loss for that would be 157. That's extremely tight. I think more realistically, GLD isn't even the best way to play it. Okay, silver is going to be the outperformer, but we need to know where gold's going to know where the precious metals are going. So GLD is going to 245 in the longer term cycles. I believe that will happen in the next year. Let's scroll in right now on the shorter term cycles, and we'll see GLD is very similar to silver. We have a wave 1 from this low from last March, and if we take the length of wave 1 and we place it at this wave 2 low, then that's going to take GLD to 215. So what could this look like in a more medium term time frame? Well, I think that this could be a WXY correction, also known as a 333 in Elliott wave theory. Don't let the jargon confuse you. All that would be is two 3 waves corrections, also known as a 333 or a WXY. So we know that W and Y are supposed to be the same length. That's why I'm kind of thinking that gold has finally bottomed, because wave Y has reached the length of wave W. So we kind of have this connector wave in between a wave W and a wave Y. And then the ABC correction makes our wave X. And then wave Y is the length of wave W. And that's exactly where it appears GLD has reversed. So the invalidation level, to be honest, is all the way down at 136. Obviously, that's too wide of a stop loss. I think a really tight stop loss, like I said, would be 157. So let's just say tentatively if 157 holds, then GLD is going to go in on a 5-month move, and GLD is going to be 215 in the next 5 or 6 months. That lines up with silver reaching 36 in the next 5 or 6 months. Okay, I really don't even think GLD is the best way to play it. Silver is clearly going to be the outperformer, so I like the silver setup better than the gold setup, where this is the invalidation and the stop level of 20.45, and if that holds in the next 5 or 6 months, we're going to see SLV reach 36. Now, from a gold perspective, let's look at GOLD. This is Barrick Gold Corp, one of the largest gold miners in the world. This is the setup on GOLD in the long-term cycles. Another great indication that the precious metals are going higher. This is a wave 1 and a wave 2. Then we have another wave 1 and a wave 2 completed during the March sell-off. Then we have another wave 1 and another wave 2 from there. So I believe we're putting in a really important wave 2 low. 18.64 would be a pretty tight stop loss, but the invalidation level is all the way down here at this low of 12.65. Let's just say we don't want to see GOLD below 16, but regardless, I still think silver is the best setup, SLV. We're going to go wave 1, wave 2, wave 1, wave 2, wave 1, wave 2. The wave 3 target is the 161.8% extension of wave 1. That takes GOLD to 42. That would be the wave 3 target. We also have a gorgeous pitchfork right here, so the median is going to be a great target for wave 3 as well. And then we're looking for a wave 4 correction to the 38.2% retracement of wave 3. So it would go something like GOLD to 42.70, retest to 38.2% retracement of 33, and then the length of wave 1 placed at the wave 4 low will take GOLD above 50 all the way to 52. So I think in the next year, year and a half, 2 years max, we're going to see GOLD more than double to 52. Okay, that's extremely bullish for gold. That's extremely bullish for the gold miners, and that's extremely scary to people who have all of their savings in cash right now. Okay, let's look at another metal. This metal is platinum. It is very, very indicative of where the precious metal market is going in the future. This is a wave 1. This is an ABC correction, wave 2. And then the wave 3 minimum target is the length of wave 1, place of the wave 2 low. So this is an even better, or I shouldn't say better, but more confirmation that these precious metals are about to explode. This is wave 1. This is the ABC correction, wave 2. The length of wave 1, place of the wave 2 low, takes platinum at minimum to 2,500. I think it's going to look something like this, where this is a wave 1, this is a wave 2, this is a wave 3, this is a wave 4, and then platinum will honestly go all the way to 2,800, 2,900. Okay, but we're talking about silver doubling. We're talking about a large cap gold miner more than doubling. We're talking about platinum, another metal, doubling. Okay, that's not fundamentals, that's inflation. Okay, wave 1, ABC correction, wave 2. Look at all these beautiful reactions on the median of this pitchfork. Platinum in the long-term cycles is going back to the median of this pitchfork. It's going at minimum the length of wave 1, place of the wave 2 low. It's kind of scary right now. One of my favorite long-term investments for myself personally is a precious metal, and that would be platinum. Okay, so I love platinum right here. It's going all the way at the very minimum to 2,500. If platinum's going to double, silver's going to double, gold's going to double, the price of gas is going to keep going up, and if you don't protect yourself, you're literally going to starve, okay, because the price of meat is going to double too. Let's look at my favorite setups in the stock market right now. This is Huya and OKTA, okay. I love Huya. This is the long-term setup for Huya. This is a large degree wave 1. This is a large degree wave 2. And this looks very similar to how NEO did around this time last year, where it was completing this wave 2 from the IPO, and then it completes another wave 1 and another wave 2 on the longer term cycles, and then it's broken above this wave 1 high. So I love Huya right here. Wave 1, wave 2, wave 1, wave 2. Huya is forming a super nest right now, where we've broken above this wave 1 high. So we're within another wave 1 and another wave 2. We'll get on the shorter term time frames of Huya. But bottom line, this IPO run up was a wave 1. We put in a wave 2 low down here at 11.78. Then we go on another wave 1 higher and another wave 2 low, put in at 18.14. So 18.14 is the invalidation level for this setup. We break above this high, confirm that this was all consolidation on another wave 1, and now we're completing another wave 2. I think Huya is about to explode. I really love Huya in the long term and as a swing trade. Let's look at the shorter term cycles right now. This is the 1-year chart of Huya. This is that low from last year. Huya goes on a wave 1, and then it bases into a wave 2 and consolidates for a couple of months. Puts in this wave 2 low, and then Huya breaks above this wave 1 high and confirms that this was all consolidation. So this is another wave 1 right here that I'm going to make in orange. So I'll be updating Huya a lot. I love this as a long-term hold for myself. And I'm going to have a stop loss and invalidation level of 18.14. A lot of you guys are going to say, oh, that's too wide. Well, I'm a shareholder, so no reason to panic sell. But also, I'm planning on Huya tripling from here, from going from 25 to 75 to 80 in these long-term cycles. Let's talk about the short-term cycle right now. This is the wave 1, and this is the wave 2. This is the wave 1, and this is the wave 2. So this is a nest. I think Huya is going to be in the 40s pretty quickly. And right now, this wave 1 went from 318 to 902. So in the next, 5.5 months, I expect Huya at minimum is going to reach 41, and that is the length of wave 1, place of the wave 2 low. Now wave 1, this wave 1 was from 1228 to 216. That's about a 2-month run. So I think in the next 3 or 4 months, we're going to see Huya go to 36, and then we're going to see it go all the way to 41. So that's how I like Huya as a swing trade, but I also really like Huya as a long-term trade where eventually we are going to break above this high of 50 and start going to the 70s, start going to the 80s for these wave 3s, okay? But let's get back to the shorter term cycles. This is the wave 1, this is the wave 2, this is the wave 1, this is the wave 2. A very tight stop loss would be 23.53, but honestly, 18.97 is the best stop loss and invalidation level. 18.14, sorry, this wave too low is going to be my stop loss and invalidation level as a long-term shareholder. This is a wave 1, this is a wave 2. In the next 3 or 4 months, I expect Huya is going to go on a wave 3. The equal legs target will take it to 41. I think that's a good option swing trade for myself as well. One last setup, this is OKTA. So OKTA, another software stock. This is a wave 1. This is an ABC correction to put in a wave 2 low. It breaks above this wave 1 high. This is also a textbook bull flag right here. So I think this is also a bull flag breakout and back test, even if you don't believe in wave theory. But OKTA goes on a wave 1, and then it goes on a wave 2 low, and it puts in this wave 2 low at 185, and then it goes 1, 2, 3, 4, 5 to break out of this bull flag, and I believe it is back testing this bull flag. So, in the larger degree, this large degree wave 3 at minimum is going to go the length of wave 1 placed at the wave 2 low. That means the larger degree wave 3 target at the minimum is 322. Now, on the smaller degree, we break out 1, 2, 3, 4, 5, put in a large degree wave 1, and we have an ABC correction to put in a wave 2 low. So right now, this is the invalidation and the stop level. It's 199. This is the wave 2 low from this wave 1 high of 294. So I believe we are within a wave 3 of wave 3. This is a very powerful setup. I expect that if 199 holds as the low, OKTA is going to go the length of this move from 917 to 216, exactly 5 months. So I think in the next 4 or 5 months, if we take the length of wave 1, place the wave 2 low, OKTA is going to go to 308 on the smaller degree, which also almost perfectly lines up with the larger degree wave 3 target. So we want 185 and 199 to hold as the low. If it does, OKTA is going to go to the 300s, 308 and 322 in the next 4 or 5 months.